happening? What's happening? Just getting started. That's good to go. That's good to go. That's good to go. Oh, wow. Check it out. Everything is good to go. All right. The hair run. All righty. All righty. All righty. Look who is here. Hey, Doc's in the house. Ron, Maria, good evening. James, good evening. All right. What happened? Oh, Logan, good evening. A lady, good evening to you too. Don, what's happening? Aragano. No, Aragno. Okay. Your hair looks awesome. Thank you. Naz, what's happening? All right. Let's get the ball rolling. All righty. All righty. All righty. What do we have here? All right. First and foremost, let's make sure we are broadcasting properly. Are we? Let's find out. I'm doing good. All right, Naz, way to go. Laurie, good evening. Hope I had a great weekend. All right. New stream. Okay. John, good evening. Hello. Can't wait until our class tomorrow. All righty, Paul. All righty. I'm looking to get started here. Huh, interesting. I'm staring at this thing trying to figure out how the hell it works. Annie, good evening. Good evening. Uncle Spunky, just getting started. Miss Gail, good evening. Arnold, how are you? Oh. All righty. Scott, what's happening? I'm trying to figure out my thing here. My man, thank you. I have no idea how this damn thing works. Live would restream. Where the hell? Melatonin, good evening, good evening. Trying to get my streaming service to work. New stream. Okay. Alrighty, alrighty, alrighty. Okay, URL stream, there we go. Copy that. Copy, now go over to here. Settings, gotta get my settings done. Okay, hold on a second. I haven't forgot about you. I'm just trying to learn how to get this thing working. Okay. And nothing is working. Nothing's working. Nothing's working. What am I trading for? I don't do Forex. I only do dividend stocks. I'm still, hey, Mr. Bill, how's it going? Boogeyman, good evening. Juan, do you do stock options? Yes, I do, Juan. We're going to get there very shortly as soon as I figure out the damn software. All right, settings. Streaming. Paste. That works. Copy. Paste. Okay. And start streaming. Is it going to work? Is it going to work? Can you do Zeta stock? 24 Spooks, how are you doing today? Ingenious Iguana, how are you doing? I'm doing great. Chicken Jockey. I have no idea what that means, eh? Say chicken jockey. That's funny. All righty. All right. Is it working? Is it working? Let's find out. Well, it says something is streaming. Let's see what it is. Offline, 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 offline. Not a single damn thing is working. Oh, all right. So it's up and working. Woohoo! Alrighty. So that being said, so let it be said, so let it be written. All right. So let's get out of there. And let's get out of there. And we are ready to roll. Yep, we're ready. All right, blind there. Right, blind there. Right, blind there. All right. Well, now we are ready to roll. I'm gonna get my tea. I'm not quite sure what that is. All right. Now we're ready to roll. Wow, it took a while to get there. Oh, look at this. I got a lot of things going on right here. Derek, good evening. Cool kid, what's happening? GMAS. Derek, cool beans, cool beans. Caden, good evening. Ingenious, good evening. This Ben Robert, cool beans. Ben Robert, cool beans. James Bryan, what's happening? David, okay, all righty. Truist Bank, hey, Boogeyman, you got to give me the tickle symbol. Tickle, yeah. The ticker symbol. We'll get ready to roll. First, what I'm seeing tonight is Riot. So let's take a quick look at Riot. What strategy do I do? You're going to find out in 2 seconds. Let's go. Ooh, TFC. Hold on a second. Riot first, then TFC. All right, we'll take a look at that one. All right. Oh, Oracle, ORCO. All right, let's get rolling. First one first and foremost. Riot, R-I-O-T. All righty. Oh, what the hell is this damn thing? All right, I can't get rid of it. I'll have to figure out how to figure it out. Trisha, good evening, Trisha. Cash, how you doing? All right, so first and foremost, we're going to take a look at Riot, R-I-O-T. First, before I even get started with that, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, if you don't understand what 1% per week is, well, that comes to over 50% per year. That's what I'm looking for. Now, I've been working since 1973. I am currently retired. I retired at 59. Okay, a little bit early. All right, so I got to wait until I get money from who? What the hell do they call those people? Social Security. Yeah, I'm not really relying on that. That doesn't seem to be working for me. But that being said, I'm closing off a lot of these damn things. Nothing's closing. Imagine that. Anyway, I'm 61 now, so I've been for a year and a half. Okay, not bad, I'm thinking myself. So all the money that I've accumulated in my working days, I've been working since 1973. So all the money I've accumulated over that time period now has to last me for the rest of my life. So I got two choices. One, I can do the investing myself, or I can hand it over to a money manager and he can do it for me. Or she can do it for me, one or the other. I really don't care which one. However, I have not yet met a single money manager or fund manager or anyone that can get more than 50% per year. Haven't met one. If you guys know of one, I'll be more than glad to have a chat with them and, give them my money so that I don't have to work anymore. And I don't have to do this anymore. But I kind of enjoy doing this. I've been doing it for 20 years, a little over 20 years, and I still make mistakes. I'm not perfect. I'm not claiming to be the guru. No, I know a couple of things that are helping me out to make 1% every week. That's what I'm looking for. Consistency, profitability, and safety, because I don't want to have to go back to work. Oh, we got Intel, and then we have Enbridge. No, sorry. Enbridge is a no. Okay, I'm looking for certain things. One, I'm looking for consistency of profitability, which means they have to have been profitable for at least 2 decades. Enbridge, no. Ethereum is not a dividend stock. So it surprises me. People will jump on a screen and they'll see a chart and they'll think automatically that I do investing. Well, I do, but I don't do cryptocurrency. I don't do Forex. I don't do futures. I do dividend investing with dividend stocks for weekly cash flow. That's my niche, whatever you want to call that damn thing. It's a small group. There's a very small group of people that actually like investing in dividend stocks. Now, I do it a little bit differently because I'm looking to get 1% every single week. Now, most people buy a dividend stock and they'll think, oh, I can get 5 or 6% per year. Yeah, good luck with that. I want 1% a week. That's over 50% per year. Okay, SMH. What the heck is SMH? SMH, Intel, INTC. 10. Trey, Sean. What the heck is TEN? Never heard of it. Okay, we got Oracle on the list. Can I trade my wife for a pack of beer and a bag of snow for some peace and quiet? Sure you can. Alrighty, so energy, wait a minute, Tacos Energy Navigation. Okay, I'm not quite sure. I haven't even heard of them. Hold on a second. All right, we're going to take a look at Riot first. Okay, 10, we'll take a look at it. I've never heard of it. Now, I'm very specific on who I buy. Are they consistently profitable? Do they have weekly options? Well, we're going to find out, so sit tight because we'll be there. Okay, anyway, I'm looking for 5 things. Anytime I look at a chart, I'm always looking for 5. 5 things. Very simple. Now, the strategy you're about to see was created for my 9-year-old daughter back in 2008 when she was 9. Okay, she's going to be 26 this year. Holy cow. All right, so anyway, 5 things. You ready? Here we go. Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it right now? And number 5, we just take our little finger, go like this. Sideways, up, down, up. Okay, that's it. I don't need to see every single thing on there. Before I go to step number 2, step number 1 is high, low, where was it, where is it, and what direction it's going. Step number 2, if I'm going to buy it, what kind of rate of return am I getting for this week? See, I trade weekly. I want to get some kind of cash flow every single week from every single one of my positions. You take a look at every single stock I own. Every single stock I own gives me a weekly cash flow because they all have weekly options. Anyway, step number 2. What does the... I can't see with that damn thing in the way. What the hell is that? What is that? Cancel. What's this one? What's this one? Damn it. What's this one? What the hell's this one? Come on. All right. We're going to be a little bit of a situation here. What's this one? Nope. Wrong account. Damn it. All right, we're going to have to do this whole damn thing over again. So while I'm waiting for that, let's at least take a look at something. Mara, Harley Davidson, and Starbucks. Ooh. M-A-R-A, Starbucks, and Harley Davidson. I swear sometimes these people actually look at what I have and want to know what I'm doing with it. Justin, how are you? Pimp in the Box. What an awesome name. Pimp in the Box. Imagine that. Pimp in the Box. I don't know how to get rid of this damn shit. I'm going to have to turn my computer off tonight. Actual question. Is Tesla or... Oh, look at that. I got one of those weird things. Trisha, thank you for that. Can I... No. All right. Actual question. Is Tesla or Microsoft or Facebook worth investing in? Now, David, I invest a certain way. I look for dividend stocks. Is the company... Does the company... Oh, wait a second. I can sign in. Is the company consistently profitable? That's what I'm looking for. Now, I don't like Tesla either. But anyway, I'm looking for companies that are profitable. Now, is Microsoft profitable? Yep. Does Microsoft have dividends? Yes, they do. Well, I like Microsoft. I buy Microsoft if it is in my price range, when it is, at the right time. Now, for the other ones, Facebook, no. I don't do Facebook because Facebook doesn't, well, hold on a second. Facebook does have dividends, but only 1 year of dividends. So no, I'm not going to look at Facebook for another 18 to 19 years because it just doesn't make sense to me. All right, back at Riot again. Let's see what we can do. And what was the other one? Facebook? No. Microsoft? Yes. Tesla? No. Now, it's not that I dislike Tesla. It's just that Tesla doesn't have a dividend. Now, the name of the show here is Dividend Stock Talk. Okay? Investing in dividend stocks for weekly cash flow. So if it doesn't have weekly options, no. If it doesn't have dividends, at least 2 decades, that's 20 years of dividends, no. Actually, that's simple. Why would anyone invest in Tesla today? Well, Tesla's a great company. They're going places for capital gains. I'm not looking for capital gains. I'm looking for cash flow. Big difference. All righty, Derek, thank you for that. G-Mens, Caden, all righty, and Genius, cool beans. Okay, Gail, we will take a look at Mara, Harley Davidson, all that. Oh, Tesla and YTSL. Okay, RDDN. Okay, were you or were you not just listening to me? Because what I said specifically, the company has to have 2 decades of profitability. Okay, TSLY, no. YTSL, no. Okay, 20 years of dividends. Nisha, what do you suggest we invest our money in? Now, see, I don't make suggestions whatsoever. Okay, what I do is I take a look at what you look at. I plug it into my little trading strategy, which I cut, and see if it works. Because I have consistently gotten 1% every single week for over 15 years, which is over 50% per year. I'm just sharing the information. That's all. I'm not giving advice what to do. I'm just taking a look at what you're looking at, plugging it in, and seeing if it works. So Riot is first on the list. So let's take a look and see what happens. All right. So Riot. Well, the last price for Riot was $7.77. So the closest strike price for $7.77 is going to be $8. Okay, so do the math for a second. If I'm buying this stock right here, Riot, for $7.77 is the price right there, then I turn around and I sell somebody the right, not the obligation, the right to buy it from me at basically as close as I can get to the exact same price. So if I'm paying $7.77, the closest strike price is going to be the 8. Well, the 8 is right here. And that comes to a grand total of 30 cents per share, or $30 per contract. Now, if I do my math correctly, 30 cents is what percentage of $7.77? Well, it's over 4%. 4%. Well, 4% on a trade like that, fine. But before we jump the gun and say, ooh, great, yay, before we do that, we got to take a little deeper dive into the chart. Okay, now just because the numbers look good doesn't mean it's the right time to buy it. So there's a few other things I'd like to take a look at. Well, we did the 1-year chart. Now I want to do the 90-day chart, which is the last 3 months. Okay, let's move forward. Okay, a year ago, Riot was at 11.18. She drops down to right around 650, shoots up to the high of the year, 1587. And that was in the beginning of November. The high's right there. She pulls back, goes sideways for a bit, and then drops again. I want to get a closer look at the last 90 days. Okay, here's the last 3 months. The high, the low, where was it, where is it, where is it going? Sideways down, sideways, now we're at 777. But look, there's the bottom, now it's going up here. Well, in order to move forward, that's the 90 days. Okay, fine, I'm looking for a pattern. Sideways, down, up, down, up, down, up. Okay, fine, there's the pattern. Now I want to take a look at the last 30 days. That's the last 1 month. Because when the last month, you get a good idea of what other investors, okay? So there's usually about anywhere between 500 and about 1,000 people here at night. Okay, so between all you guys here, we're all looking for the same thing, looking for profitability. Now, we all looking differently because we all have different risk factors and we all have a different amount of money to play with. And also, we all have a different understanding of what's right for us. So I'm just going to show you what's right for me, and you guys can figure it out from there. Now, you already know I'm looking for a safe, simple, predictable, consistent 1% per week. Simple, which means I want to do one of the easiest strategies there is. The easiest strategy that I know of is just buying the stock. Okay, but there's no profitability there, so I go the next step. What's the second easiest trading strategy I know? Well, it's a covered call. It is so easy. It is so safe. They allow you to do that in your IRA. You can't do some trades in an IRA, but a covered call, you can. Bill, so James, you only look at dividend stocks. Is that right? Because there's a website. All right, Bill. Okay, Brandon, we're going to get to that 1 second. All right, David, hold that thought. All right, I have no idea that, can't read that. Captain Obvious, good evening, sir. Annie, good evening. What platform am I using? This behind me is Think or Swim. That's through Charles Schwab. David, what about Ergo, who is sitting at 6.38% up? Okay, what about it, David? I mean, are they, I've never heard of them, number one. Number two, are they consistently profitable for at least 2 decades? Jose, hola, James. I was looking forward to another live. Glad I caught it. Good bean, cool beans. Alrighty, alrighty, alrighty. All right. So, all those questions answered, up to date. Here we are. Here's the last 30 days. Here's the 30-day high. Here's the 30-day bottom. Look where we are right now. Here's where we were. Here's where we are. Look at the motion. Down, up, down, up, down, up. Yeah. Now, Friday opened up higher, but closed a little bit lower. Well, could it mean profit taking has started? Well, if your bottom's down here at $6, and she shoots up to 7 or 8, okay, she goes from 6 to 8, that's $2. Now, I know $2 doesn't sound like a lot of money, but look at it in the grand scheme of things. A $2 move on a $6 stock is 30%. Okay, $2 move, because down here's the bottom, where it's at 6. That's the bottom. Now, from the bottom, right here, to the top on Friday, that's over $8. That's over a $2 move. That is a 30% move from the bottom to the top in less than 1 week. Now, ask yourself a serious question. If you had one of your investments go up 30% in 1 week, would you take profits? Because there's a funny thing about profits. Number one, nobody ever went broke taking profits. Number two, it ain't a profit until you take it. All right, somebody wants to take a look at US Steel. That makes it number 8. That's 8 stocks to look at so far. Okay, just sit tight. We'll get to it. So think about it that way. If you bought it down here at the bottom, okay, because a lot of people do buy at the bottom. As she jumps up, she jumped up $2 and change. All right, that's over 30% increase. So yeah, I'd be taking profits. Hell, I'd be taking profits at 10%. This thing jumped 30. So I'm not going to jump into any more Riot. I do already own some, but I have no intention of getting rid of mine. But if you were thinking of jumping into it, in my humble opinion, I wouldn't jump into it because you have 30% increase from here to here. I'd wait until after profit taken, which would be about another week or two. So I'm going to put Riot down for 2 weeks from today. RIOT. All right, we'll take it in 2 weeks, see what it does. All right, so that was Riot. That's the first one. All righty. Luke, too volatile? I'm not really concerned about the volatility, Luke. Okay, number one, never buy something you don't want to hold on to. If you don't like Riot, you shouldn't be looking. However, if you do like Riot, do you think it might be a better idea to wait until it's more lucrative? Because usually you make most of your money buying low and selling high. Well, in this instance here, our 30-day high was 820. Okay, our 30-day bottom is 6. Where is it now? It's at 777. It hit over $8 on Friday. So it made another it came close to another 30-day high. But now she's pulling back. Looks like she's pulling back. Well, if she is, I don't want to get into it now. I want to wait for it to drop back down, get that profit taken, and then find a new bottom to go back up. So I'm thinking another week or two for Riot. Okay, I like Riot. I actually do own some, and it's giving me a nice return every week. So why would I get rid of it? Yes, Peter, you're absolutely right. Riot is connected to cryptocurrency. Now, I never said that I bought this myself. I said I have some, which means I have an account that has some in this. Anyway, yes, I do have investors that I invest for. So every once in a while, they say, hey, I like Riot, let's buy some. I said, okay, not my top choice, but all right. Next on the list, TFC. What the heck is TFC? TFC. Oh, Truist. All right, well, let's take a gander at Truist. Understood? All right, Pete, thank you for that. All right, TFC, Truist Financial Corporation. High, low, where was it? Where is it? Look at the motion. Up, down, sideways, up, down, up. Okay, 37.67. So if it's at 37.67, the closest one is going to be the 38s. All right, so the 38s. 42. That is over 1%. Okay, just simple math. Okay, 1% of 37.67 is 38 cents a share, right? 37 and a half. Okay. How about IBIT, the ETF? Scott, IBIT, IBIT. Now, Scott, let me ask you a question. Does IBIT have 20 years of profitability? I seriously doubt it because I don't know any ETF that's 20 years old that's actually doing those kind of numbers. Electronics will be the first stock to rebound. Richard, thank you for that. All right, but Richard, you're not giving me a stock symbol to look at. Okay, fine. All right, so Truist. We looked at the chart, the 1 year. Okay, we looked at the numbers. Now we're going to look a little bit deeper and see, is it the right time to buy that? We got one question here. Diamato, I jumped in and sold my first covered call. Can you describe different scenarios of what to do next? Oh, D Tomato. All right. Basically, I got a couple of rules. Anytime I'm investing in something, it's got a couple of rules go with it. Rule number one, never buy something you don't want to hold on to long term. All right. If it doesn't make sense, if you don't understand it, you don't want to own it, don't buy it. So you already bought something. Great. Whatever you bought it for, did you sell a covered call? Which means, did you sell some of the rights to buy it from you? Because I'm looking for cash flow. Okay. If it's a good stock and it has a good dividend, great. That's a nice bonus. Not what I'm looking for. I'm looking for cash flow. But the reason why I do dividend stocks is because dividend stocks are predictable. Okay. I know I have a good idea of where and when they are going to move on a consistent basis, because they usually always go up just before the dividend date. Just before the dividend date's where I jump in, get my 1%, jump on out, say thank you, and move on. Antoine, good evening. Is Allstate a stock you look at? Jose, not quite sure. Allstate's on my list. Got to give me the ticker symbol because I don't ever remember buying it. All right, so let's get back to Truist. All right, because I'm trying to keep track of all the questions because I like to read all the questions and answer everything. Scott, how about Archer Aviation for 5-10 years or more? Okay, Scott, I don't buy anything to hold long term. I don't. Okay, I buy something for a specific goal, which means I'm looking to get some cash flow from it. So when you ask me, is this a good stock for the next 5 or 10 years? I really don't know. I have no idea. I know Archer Aviation is not on my list because they haven't been in business long enough and they don't have the numbers that I'm looking for. Okay, but I'll take a look at it if you want. Jose, ALL, huh? All right, right now, what is the symbol for Truist? TFC. Okay, all righty. 37 to 38. Okay, we already did that. All right, so a year ago, Truist is at 38.26. The high of the year was back at the end of November, and now around 49 bucks. All right, so the last 90 days, okay, this is what we're looking at. The high, the low, where was it, where is it? Look at the motion, okay? Sideways, down, up, down. Now she's going back up again. That you can clearly see on the 90-day chart. So is this a good place to jump in? Well, let's take a better look at it. Okay, here's the last 30 days. 30 days ago it was at 42. That's the high. She drops down to 32, and now she's back up at 37. Okay, she went up, back down, now she's going up again. Look at all the space it's got to go up here. Well, that's a good opportunity right there because she is bouncing off the bottom here, going up. The high's there. So 42. So we have between 37 and 42, which is a nice amount to look at. Well, let's take a look at it. Brian, you want to take a look at Estee Lauder? All right. Bought Ford this week, sold it, made 3%. Ganu, nicely done. Pierce, how are you doing today, Mr. Steve? Laurie, yay! Thank you. Oh, yeah, sorry. I just looked. Allstate that doesn't have weeklies. All right, I'm going to cross it off. Thank you for that. One less thing for me to worry about. All right, so let's see what a covered call would look like for Truist. Covered stock. Let's get rid of that now. We said the 38. So 38's right there. All right, just one contract. There it is. And a market order. Now, there is a reason why I do a market order as opposed to a limit order. Now, you probably hear everybody saying, oh, you should do a limit order. That way you're not getting screwed. Well, here's the thing. All right. Buy one covered call, TFC, 100, that's the weekly, to May 25, that means that's the option is going to expire this coming Friday. So if I jump in first thing in the morning, well, I got 5 days. Okay, now once I own the stock, now this is a double trade. I buy the stock and sell the option at the same time. Go from there. Aaron, I'll take a look at Apple for you. AAPL. Okay. To May 25, that means the option is going to expire this coming Friday. Now, if it doesn't hit my target price come this Friday, well, next Monday, I still own the stock. Okay, then I get to sell it to someone else for the exact same price again. And I'll do that every single week because every single week they're going to give me, well, based on this one here, $80 per contract. Now, $80 per contract, let's do some math to figure out how much that is. That we're going to need our trusty rusty, what do you call this thing? Calculator. Yeah. All right, clear that out of there. Now, profit right here. See what it says max profit, $80. So I'll put $80 into my calculator. And I'm going to divide that by the cost of the trade, including commissions and fees. That's the price right there, $37.20. Divided by 37.20, and that gives me a grand total of 2.1%. Now, do you understand 2.1% every single week is over 100% per year? Now, I'm only looking for 1%. So if I can find this trade for a 2%, well, what can I do with, a little bit more time and effort? TFC. All right. TFC 2.1. All right, that's the first one on the list. Yay! All right, next. All right, let's get out of this. Let's get out of that. Let's get out of that. Let's change this back to right that. And right there. All right. Back to where we started again. How do you decide on your bid price? Okay, so user 869756, I'll call you Tom. All right, Tom, I don't look at the bid and the ask price. Okay, it's already right there. Okay, the last traded price, which is the last traded price for Friday, right here, 37.67. That's the price right there. That's the last traded price. Okay, so that's the price I'm looking at. Now, tomorrow morning, when the market opens at 9:30, all these numbers are going to change. Okay, they're all going to change. So the math stays the same. What am I buying it for? What's the closest strike price? What am I collecting? Is that more than 1% or not? Okay. Is it a good trade? Do I like Truist? Is it a stock that I would like to buy and own for whoever knows how long, or until it hits my target? Well, at this point in time, it's at 37.67, and I'm looking to get 38. Okay, it's either going to work or it's not. Mr. Steve wants to take a look at Dell. All right, Steve, we'll take a gander at it. All righty. Good evening. I hope your weekend was fine. Lisa M., good evening to you. My weekend was lovely. Looking to drop tomorrow based on futures, then rally and rally, then drop. All right, IA, thank you for that. Jesus, I'm new to this. Can you explain the mechanics of a covered call? Jesus, hold tight. Diamato, just to clarify, you said you do a market order. Is that when you're buying 100 shares and when selling a covered call option? And why a market order versus a limit order? Ooh, Diamato, coming up with two awesome questions. Yes, I do what's called a market order first thing, only when I'm jumping in. Now, the reason for that, okay, a market order will fill instantaneously first thing Monday morning. Okay, first thing Monday morning, the bid and the ask of the stock and the option on a covered call. It's two orders in one. They're locked together from the beginning. So as soon as the market opens, I buy the stock, I sell the option, and usually it's right about the price, right about here. Okay, that's usually what you get when the market first opens. Now, a limit order, once I own the stock, like next week, if I still own Truist next week, I won't do a market order. I will do a limit order based on my purchase price. So if I do buy it at 37.67, this price right here, okay, I will sell a covered call with a limit order of 38, not a market order. I only do market orders when I'm jumping in because the stock and the option are tied together and I know what they're going to be. That's why I do a trade like so. Hold on, like this. 38's right there. Click on that. And then I hit confirm and send. Okay? I know exactly what I'm getting. All right? I'm spending $37,000 and I'm making $800. Because the stock and the option are tied together when I first jump in. Okay? So I divide 800 by 37,000, and that comes to more than 2% a week. That's what I'm looking for. All right, let's get out of that. Let's get back to the beginning. Here we go. All right. All right. Next question. Here we go. That was TFC. Next question would be Oracle. Ooh, that's a good one. ORCL. ORCL. Oracle. Ready? High, low. Where was it? Where is it? Look at this. Up, down, up. It's at 138.49. 138.49. 138. 138 is going for 335. The 139 is going for 280. The 140 is going for 230. The 141, that's all awesome. All those numbers look awesome. Okay, all over 1%. Well, great. Well, let's take a deeper dive. Is it the right time to jump into Oracle? Okay, a year ago was the bottom of the year, 113. Now from there, it goes from 113 up to 198. So 113 to 198. That's a nice, what was that, 85, 90% jump? That's nice. All right, so the last 90 days, high, low is, look at it, up, down, up, down, up, down, up. Nice flow. You can really see where it's going here. The high's here, the bottom's there, now she's going up. Well, that kind of makes sense. Well, let's zoom in a little tighter. What does the last 30 days look like? Well, here we go. down, up, down, up, down, up. It's at 138 now. 147 is the high. It is a nice movement going to the upside. Can it continue going? Well, bottom here is at 122 to 138, $6. That's only 5%. It's got a long way to go. Okay, this is only a 5% move. That's it, 5%. It's like, no, people aren't ready to sell yet. So she's going to keep on going, hypothetically speaking. There's only 3 guarantees in life, and that's not one of them. That's a possibility. All the odds and probabilities in my favor. Yeah, great, wonderful. So there's the move. Is it going to keep going? Well, we'll see. Let's find out. All right, 138. Let's actually do on a 139s. 139s. 139 right there. One contract. Market order. There it is. By one contract. Oracle. 2 May. That's coming this Friday. The 139 call option against the Oracle stock at the market to open 398. That's nice. 398 is going to cost 13 grand. Well, let's find out. Brian, we have Estee Lauder on the list. We are going to be taking a look at it in a little bit. All right. So, calculator. Here we go. 398. And it's costing 13,502. 2.9. Which one is this? $3.2. That's nice. Sorry, 2.9. Oh. 2.9. Silly me. Thank you for that. Okay, thank you for that. 398 contracts. I have no idea what you're talking about there. What about us 30, sir, up and down? Trading teacher and Gianboat? Okay. I have no idea what you're talking about here. Says, what about US 30, sir, up and down? I have no idea what he's talking about. I'm talking about Oracle. Oh, Brian wants to take a look at Alcoa. All right, Brian, hold up a second. Let me do one at a time. Tiki Talk, how are you today? The US 30 index. Yeah, dude, I don't do that at all. Okay, so I only do dividend stocks. If it's not a dividend stocks, then no, don't even bother. For me, if you like it, fine, you do it. Okay, just not here because it's not something I pay attention to. All right, let's keep on continuing. Thank you for that, David. All right, let's move on. Get out of that, get out of that, get out of that, get out of that. And next on the list, trading teacher, NAS 100, sir. Okay, do I like CXY? Okay, Michael Johnson. I'm not quite sure who CXI is. CXY. CXY. Hell no. Sorry. Michael Johnson. CXY. Hell no. I like that one. Hell no. Thoughts on using CVD as a confluence? Okay, I have no idea what CVD and confluence is. Okay, now, I didn't go to college, so I'm no mathematician, but I know the basics. Okay, adding, subtracting, division, multiplication, algebra, the basics. How many hours do I need to put in order to be able to pay my bills? Well, that was one of the simple ones. Okay, so now I'm investing my money. So if I'm investing my money into this company, This is the return they're giving me. Well, it's that kind of a percentage. Well, those are the ones that I need. Okay, I have no idea what confluence means. I could look it up, okay, but does it have anything to do with what I'm doing? Uh-oh, we got a low battery over here. That's not a good sign. There we go, that's much better. Okay, all right. Are you a trader or investor? I'm what you call both, because I'm investing my money and I'm trading it on a weekly basis. So there's your answer. All right, so we looked at Dell. Next on the list, SMH. What the heck is SMH? SMH. Oh, Vanek Semiconductors. Does this company have 20 years of dividends? Well, let's find out. Oh, really? Come on. There we go. Now, what one was this one? SMH. SMH. All right, we're going to take a quick look, see what kind of dividends SMH has been paying. 211 bucks per share. 0.5. Are you shitting me? 0.5 realty? Yeah, no. SMH, 0.5% per year. You've got to be kidding. One dividend? Come on. Well, we're going to say no to this one because it only has one dividend. Yeah, no, thank you. Bro, how are you feeling about Mara? Hey, Wizard Chess. We're going to get that in a minute. Okay, Trey, Sean, do me a favor. I asked politely, only asked the question once. I told you I already wrote TEN down. It's written down. I will get to it in the order in which it was received. Okay? All right, that's all the questions so far. All right, so let's go. What is next? Intel. Ooh, I like Intel. INTC. Now, I do own some Intel. Interesting numbers. Let's take a quick gander. Uh-oh. That one went off. Why the hell did that one go off? That camera over there just went off for whatever reason. Oh, the battery was dead. That makes sense. All right, what are we looking at here? Intel. High, low, where was it? Where is it? Look at the motion. Sideways, up, down, up, down, up, down, up. What's going on right here? All right, well, let's take a look. The current price, $20.05. The 20 is going for 65 cents. In case you didn't know, 65 cents on a $20 stock is over 3%. Well, that's a nice number, isn't it? Got to get this other channel up and running. Give it a second. It keeps wanting to verify who I am. It's like, why? Why? Live. Come on. Go live. Resume. Okay, give it a second. She's going to resume. All right, with that being said, All right, got to do this right here. Come on. And that right there, and there we go. All right. That being said, all right. Intel, let's take a quick look. A year ago, we're at 3181. The high of the year, 37. Okay, the bottom of the year right there, 1750. Look at the last 90 days. Now, the last 90 days, which is the last 3 months, look at that pattern. Okay, up, down, up, down. Now she's going back up again. Well, if it looks like that, why the hell not? Up, down, up, down. Now she's going back up. All right, the last 30 days. The last 30 days always gives me a good idea where do I think it's going next. Okay, down, up, down, up, down, up. Well, there's a big gap here. Okay, I don't know where the hell it's going. Okay, here's the high, here's the low, here's where it is now. But look, she went up, she pulled back. She went up, now she pulled back. All right, what's next? Like I say, I already own Intel, so I'm not really worried about it too much at this moment in time. But I'll wait and see what it does. What does it normally do this time of year? Now, normally, Dell has a tendency to go down this time of year. Now, if you're not familiar with this type of a chart, this is called a seasonality chart. It basically breaks down the whole year, okay? January 1st all the way there, December 31st all the way over here. So all the way to the left, January 1st, all the way to the right, December 31st. The blue line represents the movement that it made so far this year. The red line is 10 years worth of data. 10 years. So that's 2015, 2016, 2017, 2018, 2019, 2020, so on and so forth for 10 years. This is the average movement. Okay, so if it usually goes down this time of year, no thank you. Okay, now I'll just sit and I'll wait. Budweiser man, what's my thought on the future of a BRICS system? I love the idea of the BRICS system. I do. They're up for a huge challenge because if you think of it this way, I understand. All right, if you take a look at history, and don't blind yourself thinking that we're all that perfect. We're not. If you take a look at the history books in Europe, they'll tell you a total different story than the history books here in the U.S. Well, what's true and what's not true? Well, it all depends on what you want to believe. Okay? And that's a big one. All depends on what you want to believe. Because truth is subjective to your point of view. Anyway, besides the point. My opinion on the BRICS system, they're going to have a difficult time because every single continent accepts US dollars. Yes, Russia accepts US dollars. I know, I was there. I went there. I had US dollars. I changed them in for the ruble, and they gave me the ruble. Then when I left, I gave the ruble, and they gave me back the US dollar. So yeah, it's accepted everywhere. I don't know if it's accepted in China. I've never been there. I don't know anybody who has been there. Okay, but anyway, the US dollar is welcomed everywhere. BRICS, they're trying. They are. At least they have something to back it up. All right. Now I don't do politics, so my opinion of BRICS is we'll see how it pans out over the years, and that's basically all we can do. Just sit and watch, see what happens. All right. So that being said, I'm going to say no to Intel for this week. Oh, right there. All right. Next. All right. All right. What do we have here? Nixon Flax. Oh, do I like Zim? No. Nixon Flax. Intel isn't innovating anymore. Even Amazon are switching to ARM chips for their cloud computing. Okay. It's universal. Stagnant. Okay. Interesting. I see you don't like Intel. That's fine. Wow. All right, let's keep on keeping on. Let's keep moving. That being said, I like Intel. Now, last 30 days, yeah, we've seen, I can't figure this one out. So we're just going to leave it alone. Next. Now we're at 10, TEN. So I forget who it was who wanted to ask about 10. TEN. Yeah, all that bitching and moaning and 10's a no. Sorry, TEN, no. Doesn't work. Doesn't work. That's, ooh, now we got MARA, M-A-R-A. M-A-R-A. Interesting. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down. Now she's going back up. Currently at 1430. So if 1430 is the last price, well, tomorrow morning the closest price is going to be 1450. Okay? 1450, and 1450 is paying 52 cents a share. Now, 14 times 4, 40, 50. Okay, that's over 3%. All right, I like 3%. Let's take a gander at it. Hey, Wizard's Chest holding 20 contracts. Now, did you buy those contracts or did you sell them? Because there's a huge difference between the two. Okay, we'll talk about that in a minute. Oh, Lisa wants to take a look at the gap. Gap. Okay. Russ wants to take a look at Ford. And then Wolf wants to take a look at FRT and Coca-Cola. All right. Uh-oh. Pfizer. Bo wants to take a look at Pfizer. PFE, and then Macy's. All right, that's enough for now. Target, TGT, TGT. Can't pass up Target because it's a dividend king. All right, so that being said, let's progress forward with Mara. A year ago, we're at 1814. The high of the year, 30, and that was the end of November. Okay, last 90 days, which is the last 3 months. Here's the high, just over 19. Here's the bottom, right around 10. So from 19 to 10 is almost a 50% drop in the last 90 days. That's the last 3 months. Last 3 months, this thing's dropped almost 50%. That's a big drop. Okay, so from here, 10 to 19, nope, that ain't right. Yeah, from 10, 10 to 15, that's a 50% increase. Look at that. It goes from just above 19 down to just below 10. That's a 50% drop. Then this thing turns around and dumps up 50%. That's where we are right now. A 50% increase from the bottom right there. Let's zoom in to that last 30 days, which is right there. Yeah, this is going to be a no. Now, I already own some, but if I was looking to jump into it, I would say no for this week. Okay, because 30 days ago, you're at 1350. Then she drops down to below, what's that, 950? And then she shoots up 50%? Yeah, no. Not at this moment in time. Now, don't get me wrong, I own some Mara, all right, but I wouldn't jump in to buy any more at this moment in time. Now, why isn't this one working? It has a good connection. Huh. All right, it is what it is. Yeah, baby's in the house. Big Zig. Bib Zig's in the house too. Cool beans. All right, what do we have here? Sir, your camera setting is mirrored. I am seeing exactly opposite screens. Hey, trading teacher, you are 100% correct because YouTube doesn't offer in their opportunity to mirror the screen. So as I am screening live on YouTube, it doesn't give me the opportunity to flip the screen. So if it's that much of a bother, you can go to TikTok because there it works fine. All right. I think TikTok is the only one. Facebook is backwards. Instagram is backwards. And YouTube is backwards. TikTok is the only one that's actually allows you to mirror the screen. Anyway, that being said, let's keep on keeping on. Mara is okay. Next on the list, Starbuckies. So you're already selling covered calls on Mara. Yep. Well, see, I already bought Mara months ago. Okay, because as they drop, I jump in. As they turn around to go back up again. So I take a look at what the numbers look like. Remember, I say my number one rule is never buy something you do not want to own long term. If you like the stock and you want to own it long term, well then buy it. And then sell a covered call on it every 7 days. Okay? Wizard Chess, I'm glad you agree. Thank you. Oh, look at that. Matt Daddy's in the house. Joe, what's happening, Joe? All right, so that being said, all right, just make sure anytime you buy something, you want to own it full time, the rest of your life. If it hits my target, see you later. If it doesn't give me 1% every single week, see you later. Okay? I try to make things as simple and easy as I can because when I first told you guys, I created this for my 9-year-old daughter. When she was 9, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" I said, kind of odd for a 9-year-old little girl to want to know how to trade stocks when most adults don't even know how to do it. So yeah, it had to be simple. It had to be safe. It had to be predictable, consistent, and then no way for her to lose. So those 5 criteria for a 9-year-old came up with 5 rules. Number 1, never buy something you don't understand. If you're not okay with owning it for the rest of your life, don't buy it. Don't put your hard-earned money into something that doesn't make sense to you. Number 2, never sell at a loss. It defeats the purpose of the whole game. And yes, I know this is a game, okay? Number 3, make sure the company's consistently profitable. Now, this one out of all of them boggles my mind the most. Because why do people invest their money into companies that are not consistently profitable? Well, what does that mean? Well, the stock market's been around for 400 years. Now, here in the US, it's not been around for that long, but overall, yeah, the stock market has been around since the 1600s. Okay, 1602 was the first dividend stock sold. Okay, that company went on for 198 years and averaged at 18% per year. Well, nothing wrong with that. Okay, they'd probably still be going if it wasn't for corruption and mismanagement. You know, you give people power, they're going to get corrupt. That's exactly what happened. Anyway, if it doesn't make sense, don't buy it. If you're not willing to hold on to it and hold it for the rest of your days on this little planet, your little vacation here, don't buy it. But make sure you have the ability to get cash flow every single week from every single position that you have, regardless of what you paid for it. Okay, if you bought it at 14, well, great. Keep turning over the 14s. Get a weekly cash flow from it. It's not that difficult. What do we have over here? Josh M., how are you today? Gap and SU. All right, Lisa, we'll see what we can do. Ray, good evening. So you are, yep. All right. Oh, Lisa wants to take a look at Tractor Supply, TSCO. All right, next on the list, we just did Mara. Starbuckies. Ooh, I like me some Starbuckies. SBUX. Ooh, that looks nice. Take a quick gander. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down. Now she's going back up again. Okay, let's zoom in. But before we zoom in, sorry, forgot. What are the numbers? 81, 80, 83, 81. So we're looking at the 84s. The 84s, 315. Hell yeah. 315 is just shy of 4% on an $84 stock. Okay, but it's definitely over 3. Well, let's take a gander. A year ago was the bottom, and that was 71.67. The high, 117, and that was on the 28th of February. All right, so the last 90 days looks a little bit like this. Here's your high. Here's your low. That's where it was. This is where it is. Look at the motion. Up, down, up. Okay, I know that's simplified, but that's basically the way it's going. Went up, there's your high. Here's your low. Now she's going back up again. All right, the last 30 days gives me a better idea. Here's the high. Here's the low. She went up, she went down. Now she's going back up again. Okay, so from here to here, that's only $5. Okay, that's not even 10% yet. About 5 or 6% from here to here. Okay, so you got a long way to go between 83 and 100, because your 30-day high was 100. Now it's at 83. Okay, is it guaranteed? No. Like I said, there's only 3 guarantees in life. So at 84, well, let's check out what an 84 looks like. Wait a second. What does this thing normally do this time of year? So normally, Starbuckies for the next, what is that? Oh, for the next week. Basically just go to the upside. Not huge, but look what happens in about a week. Okay? 5-2 is Friday. Okay? Monday, Tuesday, Wednesday, Thursday, Friday. So basically you're going to go a little bit to the upside until Friday, and then she's going to drop. So I'm thinking to myself, if I'm going to do Starbucks, I want to do a save trade. So she's at 83.81. So I'm looking at maybe the 83s or the 82s. Okay? Because that way I can get in, and if it goes up, great. If it goes down, great. If it stays the same, great. Well, I want all the odds and probabilities in my favor. So the safer trade would be the 83 or the 82. That's a safer trade. Okay, the profitable trade is going to be the 84. But then you have to, and it's a balance. Do you want safety? Do you want a higher profit? Okay, like, would I prefer 1% and have it be safe and secure? Or do I want 2 or 3% and be, maybe I'll take it, maybe I won't. I don't know. So it's a tough one. See, me personally, I do the 82s more than likely. So let's, for the fun of it, let's find out what the 82 looks like. Just for the fun of it, let's get back here. Let's get out of that. Let's do this. Let's do that. Let's do the 82. Tra-la-la. All right, right there. Get just one contract at the market and confirm and send. And here we go. Buy one covered call, Starbucks, to May 25. That means it's going to expire this coming Friday, which is fine by me. The $82 call option against the stock, Starbucks, at the market to open, maximum profit, $2.49. Did you see that right there? Break even. The break even is $79.51. $79.51. Mortgage Magician, he's down over 100,000 this year. Okay, Mortgage Magician, I'm not 100% sure what you mean. Oh, you're talking about the stock? I don't know. It goes up, it goes down. They're always moving. All right, so let's keep on keeping on. So if the break even is 79.51, the stock is currently at 84. Well, that's a safer trade. Well, look at what I'm making off of it. I'm making 249. All right, so clear that. 249. What is it costing? 79.51. Okay, divide 79.51, and that gives a grand total of 3.1%. No, I can do 3.1%. What is this? Starbucks? S-Bucks. 3.1. 3.1. Cool beans. How to time an up or low. Josh, I'm not 100% certain what you're talking about there. Okay? Lisa wants to take a look. Track Supply did that one. Trading teacher, Microsoft, yes. Tesla, no. Sir, should we buy and hold both? Now, see, I can't tell anyone what to do. The only thing I do is I just look at the numbers of the stocks you want me to take a look at and just give you a rough idea what they look like. Okay? Now, if this one makes sense to you, Starbucks, why not? But does it make sense? That's a question you should be asking yourself. Let's go back to here, back to here, back to here. Oh, bloody right. Alrighty. So, okay, Diamato. James, do you hedge? No, I do not. Third day trading, but that's only $3 of 100. That's nothing. Okay, 3 trade day. All right, so 3 trade day, 3%. Now, I'm not 100% sure with you, but 3% a week is over 150% per year. Now, most people who invest in dividends don't make 150% per year. So I'm not quite sure why 3% bothers you, other than the fact that you're looking for capital growth and you're not looking for cash flow. Because there's a huge difference in the trading mentality of somebody looking for capital growth as for someone looking for cash flow. Now, cash flow for me, well, 1% is perfect for me. But over 1%, hey, all the better. But it's not something I look for. I look for safety first, predictability, and the preservation of my capital. I don't want to have to go back to work if I don't want to. Now, I have no problem going back to work, but if I have to, if I'm forced into it, maybe it might be a little bit more uncomfortable. Johnny Dill, what's a Chinese stock? They will fall before America. Okay, I don't really pay attention to what happens in China. I only pay attention to what happens here because I'm not in China. Brian, Starbucks has earnings on the 29th. There is a $6 implied move either up or down. Okay, Brian, I get that. But again, my number one rule, never buy something you don't want to hold on to for the rest of your life. If you're okay with buying Starbucks and holding on to it long term, fine, buy it. Does it make sense? Cool. Evening there, 86. How you doing? What is Terrace your drink and stuff will be crashing? Fear of less future business isn't of stock. All right, Johnny Dill, not 100% sure what you mean. I mean, I don't actually go to Starbucks, so I'm not really worried about it. And number one, if the numbers work, which the numbers don't look that bad for Starbucks. Here's the high, here's the bottom. She went up, she came back down again. Now she's going back up again. All right, I have no problem jumping in and buying Starbucks. But if I do, I'm going to be looking at the the 82, the 83 or the 82, because I seem to feel that it's much safer. All right, hold on a second. Johnny Dill, but how can China stocks cause just a crash also, just like the Chinese fake real estate deals there? Hey, Johnny Dill, business is more profitable than stocks. Yeah, Johnny, I get that. All right, but Johnny, what I'm trying to do, okay, there's a huge difference between business and then the stock market. And I do understand that the correlation between the two, how they're joined together. A lot of businesses do sell their stocks in order for, gaining more cash flow to improve or to move up or to do something. Okay, I understand that. But what are you investing for in the first place? Okay. I'm here investing for cash flow. That's what I'm looking for. And the China stocks don't really interfere or interact with the US stocks that I'm looking at. Because most of the stocks I'm looking at have been around for more than 50 years. Now, we haven't been that romantically involved with China, well, back then. Well, because most companies I'm looking at, getting in on the ground floor is the best stock investment I have seen. Okay, thank you, Johnny. Okay, GB for Liberty, can you tell me what you think of NUGT options? I've never even heard of NUGT. 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 Okay. NUGT. Nugget. Huh. Gold stock figures. Interesting. I'm going to say no to Nugget. Now, the reason being, December 2011. There's nothing in 12, 13, 14, 15, 16, or 17. Then it went 18, 19, 20. Yeah, no. It's just like all over the place. Okay? 32, cuts the dividend in half, drops the dividend again, then almost doubles the dividend, then almost triples the dividend, and then cuts it down by 75%. And then from here to here, it cuts it down another about 80%. Yeah, no thank you for NUGT. Sorry. Hi, brand new to your site. May I ask you a question? Sure, why not? Yeah, been holding off because I don't like the decay. Well, if you don't like decay, don't do it. Now, I wouldn't do it at all because it doesn't have consistent profitability. Now, what I mean by consistent profitability, the numbers should get higher and higher and higher and higher. This one's not, and this one's missing a whole bunch of years. They don't even have like 6 years. No. Okay, SoFi stock might not have a dividend, but it will go to $60. Check the stock. Okay, 3 trade day. No dividends, no thank you. Now, the reason why I like dividend stocks is because they are predictable. Stocks move for 2 reasons and only 2 reasons. Argue all you want, but there's only 2 reasons. One is called an unknown reason. Unknown. We don't know why the stock moved. Well, it could be an act of nature. Hurricane, fire, flood, monsoon, storm. Could be anything. You can't plan for that. It just happens. That's an unknown event. It just pops up. Now, what happens about a lawsuit? Well, you don't know they're coming. Okay, a lawsuit comes, boom, stock drops. What about if a stock? Remember what happened with Mobil Oil? Back, I think it was a long time ago. The Exxon Valdez crashed in the Northwest. Okay, oil all over the place, big ass mess. Nobody knew that was going to happen. When it did, the stock dropped. Same thing happened with British Petroleum when they sprung a leak in the Gulf. Stock dropped. Nobody knew it was happening. That's an unknown event. We don't know it's coming. Now, on the flip side, we have what is called a known event. Unknown event? A known event. Now, a known event, something you know is coming. You can plan for it. Earnings reports, you know exactly when they're coming. Stock splits, you know exactly when they're coming. Okay? A dividend, you know exactly when it's coming. Holiday seasons, seasonality. Certain stocks move directly related to Christmas, New Year's, Easter, 4th of July, summer vacations, kids going back to school in September. Certain stocks move predictably. That's called seasonality. That is a known event. Okay, so if it's an unknown event, you can't plan for it. A known event, like a dividend, well, when the dividend comes up, stocks have a tendency to go up in value. That's a known event. It means I know the stock's going to move at that time. Great. Well, I know. Now what do I do? Got some questions. Hold on a second. Let's see what we got. 86, thank you for that. Here's what I did. TSLL. Hell no. June 20 cash secured puts. Well, good for you. I wouldn't do that. TSLL is not consistently profitable. Can you review TRMD stock? What the heck is TRMD? TRMD. TRMD, double hell no. Goes back to 2020. Nothing in 2021. Okay? 10 cents, 85, 58. That's backwards. 146, 259, 146. That's like almost cut in half. 150, 146. That's going backwards. 136. That's going backward. Yeah, no. Sorry. Nope. Let's see what I think of STZ. STZ. Oh, let's do this. STZ. No. STZ. No. 2015. We are currently in 2025. Now, if I do my arithmetic correctly, now I didn't go to college, but I do know the difference between 2015 and 2025. That's only 10 years. I'm looking for 2 decades. That's 20 years. No. And take a look at the numbers. 31, 40, 52, 74, 75, 76, 80, 89, 101. Nice movement for 10 years. You got another 10 more years of this kind of activity, and then it will be a yes. But until then, STZ for me is going to be a no. Okay? I don't want 10 years worth of data. I want 20. Okay? What? Uh-oh. Oh, boy. Okay, so 3 trade day. So 3% doesn't thrill you. Okay, fine. Do I hedge? No, I do not. You say $82 call is a safer bet on Starbucks. What do you mean by safer? Okay. Now, what I mean by safer, all right, it's a simple, what do I mean by safer? All right, let's get out of this. SBUX. All right, here's the current chart for Starbucks. It's 3 weeks. This is the last 3 weeks. Here's where the price is right now. Okay, highs here, lows here. Now it's moving up. Okay, you can argue all you want. The numbers are what the numbers are. You don't like them, nothing I can do about that. Bottom shoots up, pulls back, shoots up again. It's in an upward trend. Okay, fine. Currently at 83.81. It's currently at 83.81 on an upward momentum. All right. Can you please teach me how to trade options? Yeah, sit, chill. We'll take a look at this. Do you own Oprah? You should. No, I should not. All right. Hold tight for a second. Somebody had a question over here. Who was it? The10MinuteTrader. Okay, safer trade. Now, when I say the 82 is a safer trade, stock moves in three directions: up, down, and sideways. Sideways. I hate saying sideways because they go up, they go down. That's all they do. They go up, they go down. That's it. Now, if she goes up and down, yeah, that's called sideways or channeling. All right. So stocks go up, stocks go down. Now, when I say safer, I'm looking for 5 days, Monday until Friday. Okay, 5 days. It's currently at 83.81, going upwards. So anything above 83.81 is going to be safer. Because here's the idea. Stock goes up, great, you make money. Stock stays the exact same, fine, you make money. Stock goes down a little bit, you still make money. So all three ways. But at the 84, okay, 84 is not that far away. But if the stock stays the same, you don't get all that money. If the stock goes down, you don't get all that money. Okay, if the stock goes up, that's the only way you're going to make any money with the 84. Well, not necessarily so, but safer means I want to get in, I want to get out, I want to get my, because I don't want to hold it long term. Okay, because the seasonality is showing me that, okay, this is what Starbucks usually does year after year. See, the blue line is this year. This is what the stock has done this year so far, starting from January 1st all the way over here, December 31st all the way over here. The blue line goes up, down. Here's where we are right now, that little blue dot. That represents Friday, the last trade. Okay, well, what does it normally do this time of year? Based on historical performance. Well, that's 2015, 16, 17, 18, 19, 20, so on and so forth, all the way up for the last 10 years. So the red line is the average movement. Well, look, from the end of March to the end of April, it's a nice upward trend. But at the end of April, going into the first week of May, it drops. Do I really want to be in that stock at this time right here? No. Because see, here's where we are now, this little blue dot. Move this right up to here. All right, so here's the blue dot. That's where we are now. That was Friday. Okay, it's going to go sideways for a bit, and then she's going to drop. Do I want to be in Starbucks when it drops like that? No, I don't mind having it sideways. Because if she does drop, well, my break even is 70, well, somewhere in the 79s. So I have no problem with that. But again, rule number one, never buy something unless you're okay with holding it regardless of what it's doing. Okay. Okay, and I look at TRMD, it's a no. User also, strike price 5, took in 1,000 on 10 contracts, TSLL, June 20, cash secured puts. Oh, good for you. I just don't do those. Okay? Okay? Ask my opinion. I give you my opinion. I can't help it if you don't like my opinion. Okay. 3 trade day, at least for BPCT. No idea what that means. Okay. SoFi stock might not have a dividend, but it will go to $60 and check the stock. Okay, I'm not going to check SoFi because it's not on my list. It's a hell no for me. Okay? Finster, you should teach tax avoidance. Your strategy only works if you can avoid taxes. Okay, Finster, when I say I don't do tax, what do you call it? Teaching. I don't teach how to pay, not to pay tax. There are a lot of people out there that do. Okay, tax strategist, tax planner. There are a lot of people out there. that will be able to show you how to set up your account so you don't have to pay taxes. Because taxes are strictly voluntary if you like to. If you want to, check the code. It's right there in the book. And you don't believe me? Fine. Look up the information. And when you do look up the information, you're going to see conflicting information. Because you'll have some people saying you do have to pay it, and you have some people saying you don't. All depends on who you want to listen to and who has the receipts, so to speak. Okay? Who has the backing behind them for what they're saying. So when it comes to taxes, I always tell people, talk to a tax strategist or talk to a tax planner. Okay? I'm not really worried too much about taxes because my accounts are set up in a way where I have to pay taxes legally. Legally. Got to get that word in there. All right, so let's keep on going. Check the stock sheet. Oh boy. So, someone wants to take a look at SoFi. SOFI. All right, there it is right there. Oh, it's an upward trend. Oops. Oh, I hate doing that. Oops. SOFI. Last 30 days. Okay, I'm going to say hell no to SoFi. Not because I don't like it. Well, I don't like it, number one, because it doesn't have dividends. Okay, no dividends, no thank you. But other than that, 30 days ago, we're at 12. We dropped down to 850. It's currently at 1288. So from 850 to 1288, that's more than a $4 move. And I hate to be the bearer of bad news, but a $4 move on an $8.50 stock is a 50% increase. Yeah, I ain't buying it up there. Hell no. Sorry, dude, that's a no. I'm not buying a stock that just made a 50% increase. Yeah, no thank you. Because it's not a profit until you take it. And a 50% increase in 3 weeks, you think no one's going to take profits on Monday, Tuesday, Wednesday? Yeah, good luck with that one. I'll take profits after 5%. This here's 50% from here to here. Yeah, no thank you. Doesn't make sense to me. Michael, good evening. Swan, what does Swan want to take a look? What do I think about STZ? I already looked at STZ. Hell no. Do you own OPRA? You should. Sheriff, how are you doing today? OPRA, really? OPRA. Hell no. Wasn't that quick? Okay, I don't do monthly optionable stocks because a monthly option, you can only trade it once per month. Let's go back to that. OPRA. Okay? 16 May, 20 June, 18 July, 17 October. That is a monthly optionable stock. It means I can only trade it once a month. Okay, so get dividend? Yeah, don't care. Okay, not weekly options? No, thank you. Because it means I can trade it once a month. What am I getting? 12 to 24% a year? No thanks. Okay, I only do weekly options because weekly options gives me weekly cash flow. That's what I'm looking for. Okay, let's go back over to here. Do I own Tesla? No, I don't. Tesla doesn't. Yeah, I don't own Tesla. Can you look at TXN, Texas Instruments? I'll write it down. TXN. We probably won't get to it tonight because it's 11 o'clock and I quit at 11:30 and we already have about 15 more stocks to look at. All right, trade in a Roth IRA. Yep, good luck with that. Can you please teach me how to trade options? Just stay tuned. Daniel Diaz, good evening. Lord, good evening. Richland, good evening, Richland. James, can we look at MOS? Ooh, I like Mosaic. I said a MOS, a TER, a G with it. Oh, hell no. Now, the only reason I'm saying no to Mosaic, now it is on my list, okay? It is on my list, but look at this. 22 to 29? Yeah, no. Okay, now I'm going to put Mosaic down for 2 weeks because that's going to have profit taken this week and next week, which means 2 weeks from today, it will probably be in the right position. Bill, yeah, you can join if you want. Okay, just go to the bio and find out where you join from there. Okay, okay. MLS looks like it has good premium. Yeah, but Andrea, you've been here long enough. This right here, from 22 to 29, where we are right now. Okay, from 22 to 29 is $7. Now, $7 on a $23 stock is close to 30%. Okay, no, doesn't look good to me. Ooh, do I own PLTE? No, I don't. You got that Hemlock UNC. I have no idea what Hemlock UNC is. Oh, do you own PLTR? Hell no. Okay, I always tell people, look at the numbers. If the numbers don't make sense, no. Uh-oh. 3 trade day. Everyone just picked McDonald's, Home Depot, Target, Walmart, Procter & Gamble, and Hershey's and Coca-Cola. Thank me later. Okay, those are the ones I look at. Uh-oh, 3 trade day. XDC, no. XRP, no. XLM, no. And what? And Wetchen and Flare, yeah. No. Okay, 3 trade day. I seriously think you're in the wrong place, dude. Do you ever close an option early? No. What is an order block? I think you're in the wrong place, because order block doesn't really come into play with stock options. Eric, good evening. Mike, good evening. Jose Lopez, do you ever close an option early? Once in a while. It depends. It's always going to be about the numbers. What did I buy the stock for? What direction is it currently going? Did I already sell an option against it? If so, what relationship? Okay, what did I buy the stock? What option price did I sell? What strike price? Where is it at now? Where is it going? What do I think? What supporting information do I have to it? Okay, it either makes sense or it doesn't. It's either going up or it's coming down, one or the other. Okay, but I'm basically a 5-day trader. Buy on Monday, hopefully be out by Friday. Okay. Next on the list, Harley Davidson, HOG. Now, I do own some Harley Davidson. Interesting. Okay. The high, the low, where was it? Where is it? Look at the motion. Up, down, up, down, up. Okay, it looks good on the 1-year chart. Well, last trade, 23.50. Okay, well, the 23.50 is going for $1.10. That's over 4%. But here's the big question. Do you like Harley Davidson? Now, I own Harley Davidson, I think, in 3 different accounts. Now, I have 7 accounts. I share 3 of them publicly. So I actually show you every single trade that I make. Okay, and I do have a morning trading group with, it is a paid service where people paid to actually trade with me and you to ask me questions. 5 days a week, Monday, Tuesday, Wednesday, Thursday, Friday. As soon as the market opens, we're there, we're taking a look, we're seeing what's happening. Now, you got to remember what my priorities are. My priorities are consistency of cash flow, which means I want cash coming in every single week from every single position. Okay? Number 2, preservation of capital. I do not want to lose. Okay, we're going into week number 18 for the year. Okay, week 18 there's 52 weeks in the year. Okay, tomorrow starts week 18. I have 2 losses so far this year. Only 2. And I have a whole shitload of trades that I've been doing. Anyway, next is Harley Davidson. All right. A year ago, Harley Davidson's right about 35. She got a high of the year at $39.98. Let's call it $40. Okay, that's back in September, the middle of September. Okay, last 90 days, high, low is, look at the motion, down, up, down, up. 23.50 at the moment. The bottom is here. and she's moving up. The last 30 days. Here's the last 30 days. 30 days ago was the 30-day high. She drops, now she's coming up. Look at the movement. From the bottom at 20 bucks, we're now at 23. Well, that's only around, what, 12%? Okay, I don't see a whole bunch of people, taking profits at only 12%. Maybe, maybe not. I don't know. I mean, I have no intention in selling mine. Well, I bought mine at 35, and it's currently at 23. Well, you think I'm feeling a little awkward? Not really, because even though I bought at 35, I'll probably end up selling the 24.50s. And the 24.50s are going for 70 cents a share. Well, 70 cents a share on a $35 stock, even though it's currently at 23, I bought it at 35. And I'm going to be selling the 24.50s. Okay, the 24.50s are way up here. Do I think it's going to hit that? No, because here was the bottom. Up here, once it goes here high, I don't think it will. But that's for me. You guys got to figure out what works for you. But even though I bought it at 35, which is not even on this chart, okay, 35 is going to be way up here somewhere. Okay, I'm not worried about it because I'm okay with Harley Davidson. It's been in business for over 100 years. Harley Davidson is an American icon. They're not going anywhere anytime soon. Yeah, the millennials and Gen Z's not really Harley riders. Okay, you got the baby boomers and then the Gen Xers. Now that's your Harley crew. Yeah, but anyway, besides the point. I have it. I have no intention on selling it, and I keep getting money every single week from my position. All right, that's my ideal. That's what I'm doing. I want cash flow from everything I have. So what? I bought it at 35. I'm still getting. The funny thing is, all right, let's pull this back for a second. Okay, the high of the year for Harley Davidson is 40 bucks. The low is right around 20. That's a 50% drop. Now, when you buy Harley Davidson at 23, you get whatever the dividend is. Well, guess what? If I bought it at 40, I'm getting the exact same dividend as you are, even though I paid about twice as much as you did. Well, I'm in at 35, and I'm selling off the 24.50s, which is, I'm at 35, way up here. Okay, that's where I jumped into Harley. Brian, expected move this week is 2.37 due to earnings. Okay, I'm not too worried about it, Brian, but we'll see how it works out. Mark, and from the cash flow, you win long term. Yeah, I do, because I'm looking for cash flow on a weekly basis. Oh, William, good evening. Matt, good evening. All right, Matt, question. How do you know that a company is about to spike up? Well, Matt, I don't really know. What I look at clues. The clues are basically simple. Number one, well, where is the current momentum? What are buyers and sellers doing? Because that's all there is here, buyers and sellers. We buy, we sell, we're looking for a profit. Only way to make a profit is to buy something and then turn around and sell something. It's the only way you can make a profit off of anything. So if Harley Davidson's bottom of the year is at 20, now it's currently at 23. Well, if I buy it at 23, okay, sell somebody the rights to buy it from me at the exact same price I just paid for it, what am I collecting? Well, the 23.50s are going for $1.10 a share. That's over a 4% return. Well, I like a 4% return a week. Remember, I'm doing this for weekly cash flow. If I can get 1% every week, I'm perfectly happy. Well, but the numbers on Harley Davidson for this week are 4%. Well, does it make sense? Well, there's a lot of questions you need to ask yourself. And the big question should be, does it make sense? The second question should be, do I like Harley Davidson? The third question, Do I like Harley Davidson at this current price? Next question, something like maybe, can I picture myself buying Harley Davidson, selling a covered call every single week? Well, if it's profitable, why not? If it makes sense, why not? Okay, because you're all going to retire at some point. Okay, and that's a hard fact that everybody's got to understand. At some point in time, you're going to be too old to work, for the most part. Okay, then you got to figure out where's your money going to come from, because we're the only species on this little rock that's got to pay to live here. Unless, of course, you go, live in the woods and live off the land. That's a possibility. I don't really see it happening for most people. That being said, let's take a deeper dive into Harley Davidson. A year ago, $34.93. Looks like we have a triple top at $39.80. Look at that. Triple top right there, right in the end of September. The last 90 days, here we go, last 90 days. High, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up, down, up. Okay, bottom here, 20. It's at 23 now, a little over 10%. Last 30 days, right there. Here's your 30-day high. Here's your 30-day bottom. Look, she's shooting up. $20.50 to $23.50. That's a $2 move. $2 move on a $20 stock is only 10%. Only 10%. Now, we've seen stocks jump 20%, 30%. We've even seen a couple jump 50%. Well, this one's only jumped 10% in the last 3 weeks. Is it worth jumping into? Well, the high is $26.50. And we're only at $23.50. So we got another 15% to go. Does it sound like something you like? Now, I already own it, so I'm okay. Okay? I'd probably do the 24.50s, maybe the 25s. Maybe. Depending on what it opens up tomorrow. Okay? Now, the 24.50s are giving me 70 cents. That's almost 2% of my purchase price. The 25s giving me 50 cents. Was that 1.5%? Well, I can live off of 1.5%. Maybe I'll do that one. Mark, I picked up Nokia and Ford for the yield. Okay, Mark, there's nothing wrong with that at all. I mean, you bought it for the yield, which means you plan on holding it for a year. All right, there's nothing wrong with that. What about selling a covered call against it? Okay, let's take a look at Ford for a second. Ford. Okay, here's Ford right now. It's at 10 bucks. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up, down, up, down, up. Okay, look at where it is compared to where it was. That's a big move there. This thing's got a little bit of a pullback coming. In my humble opinion. Is it guaranteed? No, we already know there's only 3 guarantees in life. So let's take a look at the last 30 days for Harley Davidson. For Ford. Okay, here's the top, 1040. Here's the bottom, 840. It's a $2 drop. Okay, that's 20%. Here's a 20% drop. Now, from 840 to 10, that's $1.60. Well, $1.60 off of an $8 stock is 20%. Okay? Isn't that weird? She drops 20% and then she jumps up 20%. Okay, but does it make sense to buy it here, hoping that it will go higher? Well, higher here is only 40 cents. That's not even 1%. James, could you please suggest some resources to study trading and investing in depth? Well, what I used, well, you don't really want to do what I did, because I did almost every single trading course there was. It cost huge amounts of money. Anyway, besides the point. The simplest book I ever read, simple, easy read book would be The Wall Street Money Machine by Wade Cook. It's simple. It's easy. It's a very small book. It's easy to get through. Schools Live. Well, good evening, Schools Live. How are you today? All right. We're 20 past 11, getting ready to be done with it. Mark, appreciate the lesson. I'm a newbie. All righty, Mark. Good for you. You picked up Nokia and Ford for the yield. I'm not quite sure. Okay, Brian, I'm going to take a look at Estee Lauder next. Now, you picked up Ford. I don't understand why you would pick up Ford. No, don't get me wrong. I understand why, because you like the stock. But think about it. 3 weeks ago, we're down at $8. Okay, now we just made a 20% move. Not quite sure why you got it now rather than wait for the profit taking to take place. This thing could drop in about another 2 weeks. Then jump in somewhere on 920, somewhere in that area. How is the book Street Smarts by Linda? I have no idea who Linda is. They made a business transition into EV. Okay. Not quite sure why you... Yeah, but Mark, why would you jump in after a 20% increase? Okay, don't you understand the way stocks work? Stocks go up, then they come down, and then they go up, and then they come down. The reason why they go up is because people keep buying it. Okay? When the stocks move a certain percentage, people start getting out to take their profits. Well, a 20% move would cause a lot of people to jump out. Who's the author of The Wall Street Money Machine? That would be Wade Cook. Wade Cook, he did a great book, okay? All right, The Wall Street Money Machine. And then he did classes. He went all over the United States selling classes on some of the basic trading strategies in that book. Then he made the mistake of going to show people how to not pay taxes, okay? So yeah, then he ended up in jail because IRS don't play that game. They don't want people to know stuff that Wade Cook was teaching. Okay, so they find stuff to find a way of throwing you in jail. I know a lot of people who wrote books and started giving lessons and classes on, reducing your taxes. And they get thrown in jail because, the IRS plays dirty. They do. Read the book. Read the, what do you call it? Some of the lawsuits, some of the precedents. Some of the precedents set up in some of the lawsuits against the IRS. Some of it's very fascinating. All right, let's keep on keeping on. Oh, we got 10 minutes left to go. What else do we have here? A1 Steak wants to take a look at Disney. I don't know why. Disney, DIS. Interesting. Last 30 days from 80 to 90. 80 to 90, that's $10. $10 on, that's a 12% increase. Okay. Okay, so here's Disney. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Down, up, down, up. Okay, simple, easy. Now, it's currently at $90.28. So the 90 is going for 158. The 91 is going for 111. Me personally, I'd do the 90. It's a safer trade. Because at the 91, well, the stock has to move up. Well, anytime a stock has to do something, has to perform, well, there's more risk involved. Okay? The 90, there's less risk. The stock doesn't have to do anything. Okay, remember, stocks only go 3 different directions. Up, down, or sideways, or flat, or channeling, however you want to call it. Well, currently it's at 90.28. Well, the 90, it's already in the money, which means nothing has to happen. If it goes up, great. If it stays the exact same, great. It can even come down a little bit, fine. As long as all three in my favor, great. The 91, they're not all three in my favor. Because the stock has to go up in order for me to make the profit and get all my money back the following Monday. Mark, you're welcome. Lisa, I just bought the book, Wall Street Money Machine. I'm about to start chapter 4. Oh, cool. Let me know what you think afterwards. Matt, how long do you hold onto a stock on average? So from the moment you invest to the moment you exit the trade. Well, on average, it's been about 2 weeks. I prefer 1 week. I prefer to get in on Monday and be out on Friday or Saturday. That's my preference. Doesn't always happen. The longest I've ever held anything was 9 months. And that was Kimberly Clark, KMB, 2 years ago. Okay, I bought it, stock dropped, and then it took a while for it to retrace and come back up again. But in those 9 months, a lot of people forget this fact. In those 9 months, I've collected 3 dividends. Also, 9 months, I collected 3 dividends and 9 months, about 35 or 38 premiums every single week. A premium every single week. Got 3 dividends and over 35 premiums. Well, the premium, if you remember, okay, 90.28, the 90s got $1.58 per share. Can you imagine getting $1 per share on a $90 stock every single week? There's 52 weeks in a year. Okay, a $90 stock, if I get $1 every single week, that's $52. That's more than a 50% return. Well, that's why I do it. Because if I didn't, I'd have to go back to work, and I don't want to do that. Okay, next on the list, Bo stepped away. Did I cover Pfizer? No, I did not. Not yet. Brian, Macy's hog movement expected up or down? I don't know. We're working on Disney at the moment. So, Disney. A year ago, we're at 111. The high of the year is at 118, and that was the end of November of last year. Look at your last 90 days. Okay, here's your last 90 days. Up, down, up, down, up, down, up. Not that difficult. Let's do the last 30 days. The last 30 days gives me a better idea of, do I plan on jumping into this or no? 30-day high, 30-day bottom. She jumped up, back down, back up again. So it's moving to the upside. 82 to 90, it's $8. That's a 10% move. From this bottom here to here, that's 10%. Do you think people take profits at 10%, or do you think they might go a little longer? I think they might go a little longer, maybe another week. Don't know. But the question always comes down to, do you like the stock? Does it make sense to you? Is it something you want to buy and hold on to? These are very important questions. But there's only 2 criteria I look for. Consistency of profitability. Okay, Disney, they do make their profits. 2, weekly options. They do have weekly options. Okay, the 90 is going for 158. A safer trade. I like safe trades. Get in, make my 1%, get out. Next week, same thing. Get in, get my 1%, get out. It takes me anywhere between 5 minutes and 15 minutes doing my account. Well, that's what I'm looking for. 5 or 10 minutes a day. That's why it's called the 10-minute trader. The 10-minute trader. Brian, we don't know. That move is either up or down. Okay, Brian, you're correct. How long do you hold? On average, I already did that one. Trade with Josh Gems. Did you read Market Wiz by Jack Schwager? No. Matt, you being a stock guy, do you agree with Cornelius Vanderbilt way of trading stocks back in his day? No. because Cornelius Vanderbilt didn't have stock options available to him. Lisa, I think Disney's dividend sucks. I think it's very inconsistent. Well, let's take a look at Disney's dividend. DIS. $19.62. Holy cow. I want to go to 2005. Because 2005 to now is 20 years. Okay? So 2005, the dividend was 26. 2006, it was 30. 2007 was 35. Well, 2008 and 2009, no increases. Okay. 2010 went to 40, then to 60, 75, 86. In 2014, it was at 115. And in 2015, it's like a 50% decrease. Well, that kind of sucks. A 50% decrease from 14 to 15. Not necessarily so, because see, 9, 10, 11, 12, 13, 14 were all 1 year. Okay? 2015, they gave two dividends, 66 and 71. So you add those two together, that's 137. Okay, so a 115 to 137, because you combine the two together. And then this one was higher. And then that one. Okay, I see it. 17, and then 18, 84, and 88, and then 19, 88, and 88. Uh-oh. Nothing in 2020, nothing in 2021, nothing in 2022, and then 2023, 30 cents. Yeah, no, they were doing great right up into 2019. So from whoever took over in 2020, yeah, they suck. Think about it. Nice dividends all the way up until 2019. And then they just messed them up from there. Scotty Young, we don't know. The move is either up or down. Yeah, Brian, see, I know we don't know if it's going up or down. We don't know. But what do the odds and probabilities tell us? Okay, we can look at what other investors are doing. What have they done all last week? What have they done the week before? What is the trend? Is it in an upward trend or is it in a downward trend? Okay, now nobody really knows what's going to go on. Tomorrow morning, there's only one person who has any kind of clue what's happening. That would be the market maker. He opens it up at a certain price, and that's what it is. All right, it's 11:30. You guys have no more questions. What time frame do you trade at? 1 day. Oh, Brian. Yes, sorry, Brian. Let's take a look at Estee Lauder real quick. I love Estee Lauder. Had some great numbers last year. Made some nice money off of Estee Lauder. Ooh, look at that. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Down, up, down, up, down, up. 59.39. Look at that. From 150 to 59. That's over a 50. That's like a 60% drop. Okay. Do you like Estee Lauder? Well, let's take a look. A year ago, we're at 150. Okay, we bottomed out at 48. That's a big freaking drop. It's $110. Well, alrighty then. $110 from a $150 stock. That's a big drop. Last 90 days. High, low, was, is. Look at this. Down, up, down, up. That's a nice move from here to here. All right, let's zoom in a little closer to get a better idea of where we think it might be going. High, low, now it's going up. Okay? High, low is, look at the motion. Up, down, up. All right. Up, down, up. All right. So 52 to 59, $7. That's what, 12%? All right, 12% is not that bad. What does it normally do this time of year? Well, this time of year, yeah, you got 1 week before she drops. Sorry. I mean, don't get me wrong, you know, I like Estee Lauder. The numbers look good. What do the numbers actually look like for Estee Lauder? Hold tight. Hold tight. Hold tight. Okay. 59.39. I'd be doing the 59s because the 59s, safer trade, is paying $3. Okay, so 59 on $3, that's about 5%. I'm going to write that one down, Estee Lauder. Estee Lauder. 209. Wow, that's not a lot of options out there. Anyway, that is 11:30. My time to call it a day. I think you guys are all done with your questions. Nan, nice to see you. Atman, cool beans. Mark's Capital, good class. God, you like it. Alejandro, Misty is a good investment at this price. Now, Alejandro, I don't know anything about you, so I really can't tell you whether or not that's good or bad, but I can tell you, Misty, take a look at the numbers. Are they consistently profitable? Is their stock going up? Are their profits going up? Do they pay a dividend? If so, does the dividend consistently increase? Okay, is it a capital growth stock, which means your stocks get more valuable as the years go on, or do they share some of the profits? All right, Miss Lisa, see you tomorrow. You appreciate the information. All righty, Matty boy. Cool beans. How do I find your class in the morning? The class in the morning is a paid class. Okay? Now, people do pay for it for the privilege of being able to have somebody watch what it is you're doing. Okay? Now think about it. How much is it worth to you to have somebody watch over what you're doing to make sure you're doing it right? Well, my goal is 1% every week. Simple, safe, predictable, consistent, no way for me to lose. Okay, that's my goal. Okay, I don't know if you can fit what you're looking for with what I do. And if you are interested, the top left corner where you see the link, my bio, the link's in the bio, okay? The10MinuteTrader.com. You go there and it shows you exactly how to join. The very first screen when you land on it, the live trading online. It's a big black button. It's live trading online. Just click on that. Follow the steps. All right. All that being said, well, you guys have a great day, and we will catch you again tomorrow. So out of here on Facebook, have a great day. Okay, YouTube over here, you guys have a great day there. And now the end is near. And Instagram, have a great day. And TikTok, you guys have a great night. And over here on YouTube, you guys have a great night also. Right there.